Why today, Guy?
I wish I knew. You know, we talked about it at 5 o'clock in High Mel. I thought one of the main reasons was you're always trying to back into these things, the reasons why. But I thought we underestimated, or maybe the market has underestimated, the U.S.-China relations. And I think all the headlines today that I was reading about the Chinese potentially selling 20% of their Treasury holdings, I think finally the market woke up to the fact that maybe this rhetoric is going to continue. That coupled with the notion, something we've talked about, that despite the fact that the broader market has been rallying in a meaningful way, the VIX, the volatility index, has been painting a much different story, and that manifested itself today as well. So those are the two things that I was looking at in terms of why specifically today.
Yeah, Bonawyn, when you try and figure out what causes sell-off, where do you go to? What do you think of?
Well, listen, I mean, I think you've got to look at lagging and forward-looking indicators, right? And as Guy pointed out, and as we've all said for quite a bit, that VIX had been increasingly elevating. It was rallying in tandem with the market, which clearly tells you, listen, it's not necessarily that we're going to sell off, but that there's going to be a bit more skepticism about the rally. And we've had the push and pull between value and growth. We've seen, an oscillation between breadth and narrowness of the market. And I think all of those things have kind of contributed to a topsy-turvy, type of pullback. I mean, it's hard. I don't see any one thing in particular that led to this, but I don't think any of us should be shocked to see this. We've had extremely high volatility to the upside. You shouldn't be shocked that you have volatility to the downside as well.
Yeah, and Karen, there are so many new traders to this market who might not have experienced this sort of pullback in a single day. What do you tell them, and where do you think stocks, do you think this is the end to this massive run that we've had?
Well, I think that there's so many new traders is part of the reason that we've had this big up, and I think a part of the reason maybe that we have this big down. I mean, when I think about the Robinhood trader, I don't know on average if the Robinhood trader has margin debt, right? So if you owned a stock and you enjoyed the way up, right, that's great, but did you take any money off the table to decrease your margin? If not, then we're going to see a lot of selling pressure continue. And I think that's part of what's happening today. When you think about the names that really exploded to the upside, and you think about the overlap with what I think of as Robinhood type of names, that overlap is really high. So I think that this will continue to the downside. If we see margin calls, that takes a day or two. So I think that's why I think this downtrend will continue. But I think ultimately, there are things to buy, and I want to be out there buying them, but not quite yet.
Yeah, and you had a couple of names in the 5 o'clock, but Lowe's among them, right? FedEx, I think, is one that you mentioned as well.
Yep. Good memory there, Mally. Lowe's, FedEx, Walmart, URI. Something that I don't want to buy, though, would be something like a Macy's.
Yeah. Bonawyn, do you have a shopping list?
I do. I mean, it's pretty extensive as well. So listen, a lot of the tech names, and we've known, like I've been a bit bulled up on this tech thing for a while, but I also preach prudent risk management. So for me, I'm looking at everything from, as Karen said, Walmart, Lowe's, Target, to Goldman Sachs, JP Morgan, Morgan Stanley, to FedEx and some of the transports. But a lot of the tech names, right? CrowdStrike, I'm staying away from names like Tesla. If there's a level that it gets there, I'm happy to own some of it. But Apple, Amazon, Baba, names that I've been taken out of because I had stop limits in. I'm looking for levels to retrench there as well. Absolutely. And if Karen's point is correct, and this is margin call driven, then to me that's more of a supply-demand technical type of situation rather than people reevaluating valuations or changing, their investment thesis. So for me, as Dan said yesterday, you pick a spot where you want to own these names, put a limit order in, and then own them.
All right. And Guy, you as well. A shopping list, perhaps?
Well, I think Karen spoke to this last night. The banks were trading really well today. To a certain point, then everything sort of got flushed. But the banks, to me, is where you want to be. I mean, the banks are not the problem in this environment, and I think people have stayed away from them for good reason, because there's been so much money to be made in some of these high flyers. But I think when people come to their senses, they'll realize, I think Karen can speak to this, valuation-wise, these banks are attractive. That coupled with the fact that the problem isn't in the banks this time. The banks have actually secured themselves and fortified themselves to a point where they actually could be a safe harbor going forward. So I would say the banks.
All right. Well, as we mentioned, tech stocks leading the markets lower, but the pain wasn't all equal. Josh Lipton's got more on this. Josh.
So, Melissa, let's start with the world's most valuable company. Check out Apple, coming under pressure, falling about 8% in today's trade. Its worst day since March, now about 12% off its all-time high. But keep this move in context. It's still up about 130% over the past 12 months, up about 50% in the past 3 months alone. Other stocks that got clobbered, take a look at the SMH, the ETF that tracks the chips. Its worst day here since June 11th. And some of the hardest hit names included NVIDIA and AMD, Skyworks and Qorvo. Many of the chip names have benefited from that work from home trend that has meant more demand for everything from PCs to the data center. But chip analysts do say valuation after such strong runs is a concern for investors to think about. And finally, investors sold out of the cloud stocks too, the CLOU. Worst day since March. Among the notable laggards, high flyers like Zoom, Box, and Twilio. Again, though, keep in mind the moves all up triple digits since their lows in mid-March. Melissa, back to you.
Josh, thank you.